The NASDAQ market is currently closed, but in after-hours trading on Friday, October 17, 2025, Rezolve AI PLC, trading under the ticker RZLV, closed at $4.87 per share, an intraday change of minus 0.05 or minus 0.99% on a volume that substantially exceeded its 90-day average. The final closing price for the last regular session was $4.87. However, the true tension in this stock is not in a fraction of a percent move, but in the glaring divergence between the company's aggressive acquisition-led growth strategy and the very serious securities fraud investigation currently facing them. This is not a typical speculative play. This is a company with institutional backing from names like BlackRock and Citadel, rapidly expanding its footprint while simultaneously defending itself from short seller allegations that its business may be materially misrepresented. The market is trying to price both the dream of high-growth AI and the nightmare of potential corporate misconduct, and the resulting volatility is intense. The general market expectation for Rezolve AI is straightforward. It is an aggressive, high-growth AI player focused on the commerce sector, aiming to capture market share through a flurry of acquisitions and bold guidance. Investors largely believe in the company's vision of agents at commerce, where autonomous AI systems handle transactions. This belief is fueled by the reported surge in its annual recurring revenue guidance to $150 million for 2025, with an eye towards $500 million by 2026, and its recent high-profile acquisitions of companies like SmartPay and Subsquid, which are meant to buttress its digital asset and data infrastructure. They have major, tangible partnerships with tech giants like Microsoft and Google, validating their core product, the Brain Suite, as capable of operating at enterprise scale, servicing over 100 enterprise customers globally. The narrative is that of a powerful, fast-moving disruptor executing ahead of schedule. But this optimistic view completely minimizes the substantial financial and legal risks that define RZLV's immediate reality, and that's the part we need to focus on. The stock's recent movement has been a chaotic mix of huge upward swings followed by sharp, confidence-eroding drops. After hitting a 52-week high of $8.45 in September 2025, the stock has trended down, losing a significant portion of its gains. This intense volatility is a direct result of the battle between long-term growth optimism and immediate financial scrutiny. A key inflection point was the September 29, 2025 short seller report, which alleged that the company was overstating its revenue and misrepresenting its core AI capabilities. The stock promptly fell by over 10%, while Rezolve AI strongly rejected the report, calling it a self-serving attempt to profit from short positions. The damage was done, and the ensuing news of a securities class action investigation by a global investor rights law firm only compounded the uncertainty. This tells you that the market sentiment is fragile. It is willing to cheer growth, but it recoils sharply at any sign of a fundamental crack in the company's story. What is particularly telling in the trading data is the volume. We are seeing average daily volumes that dwarf what would be expected for a company of this size, suggesting a high level of speculative trading and a significant short interest battle playing out. This isn't long-term institutional buying or selling driving the day-to-day, it's short-term positioning and counter-positioning around narrative-shattering news events. The institutional picture is complex, as filings show both significant increases in institutional ownership from major firms like BlackRock and Geode, alongside indications of high short interest and put option activity. This is the definition of a stock being structurally pulled in two directions. Value investors and index funds are getting in due to the strong narrative and inclusion in indices like the Russell 2000, while aggressive hedge funds are taking bearish positions based on the contested financials and legal overhang. The company itself operates an AI-powered platform for retail and commerce known as the Brain Suite, which includes brain commerce and brain checkout tools. The core idea is to automate and optimize every step of the customer journey, from personalized recommendations to digital asset payments. Their differentiation lies in their BrainPower large language model, which they claim is specifically engineered for commerce and offers superior performance to generic models. The business model is a subscription-based software as a service that charges enterprise customers for deploying their AI solutions. Despite the massive projected ARR, the underlying financials remain challenging, a reality often swept under the rug by growth investors. The company reported a significant net loss for the first 6 months of 2025 and a negative stockholders' equity position, meaning its liabilities currently exceed its total assets. This is common for aggressive growth companies, but it adds a layer of financial pressure, making the aggressive revenue growth targets less a sign of success and more a necessity for survival. The recent acquisitions, Smart Day for digital asset payments and Subsquid for its blockchain data platform, signal an intentional and rapid move to integrate digital currency and decentralized data into its commerce stack. Management is betting that the future of retail involves seamless digital assets, and they're acquiring the necessary infrastructure now. While this is a technically sound strategy to secure future relevance, it is expensive and requires significant capital expenditure, contributing to the negative cash flow from operations. This is the classic growth at all cost narrative, but in the current market environment, the cost is becoming harder to ignore, especially when external groups are questioning the integrity of the underlying numbers. Looking ahead, the stock's performance will be governed by 3 main catalysts. First and most critically is the outcome of the legal and financial scrutiny. Should the company successfully rebut the short seller claims and the investigation concludes favorably, the overhang could be lifted, causing a major short squeeze and rapid appreciation, bringing the stock closer to the average analyst price target, which currently sits near the $9.67 mark, nearly double the current trading price. Conversely, if the allegations gain traction, the risk of significant downside is clear. The second catalyst will be the conversion of their stated ARR guidance into verifiable quarterly revenue. Q3 and Q4 2025 earnings reports will need to show consistent massive sequential revenue growth to legitimize the full-year $150 million target. If they fall short, the market will punish the stock brutally. The third is the continued strength of their partnerships with Microsoft and Google, which act as key distribution channels. Any expansion or contraction of these relationships will directly impact the company's global reach and growth velocity. The expectation is that RZLV is an unstoppable AI growth story. The reality is that it is a highly indebted, non-profitable company caught in a public financial dispute, whose stock price is a battlefield for institutional optimists and sophisticated short sellers. The long-term upside remains if the underlying business proves sound and the acquisitions are integrated efficiently, leading to genuine profit expansion and cash flow improvements. But investors must acknowledge that this is an all-or-nothing bet. The high price-to-sales ratio, even at the current price, suggests a valuation built on future potential, not current metrics, demanding near-perfect execution. It's a classic high-risk, high-reward profile, amplified by the sector's current hype cycle. For those paying close attention to the trading volume, the elevated activity following the news suggests that big players are either loading up on weakness or aggressively exiting positions, and the direction of that institutional flow over the next few weeks is the single most important signal to monitor. The stock has a high correlation to broader market volatility, suggesting it trades more on sentiment and risk appetite than on its individual fundamentals on any given day. This requires a surgical approach to position sizing and risk management. Comment below how many shares of Rezolve AI PLC you currently hold, or if you view this as an interesting growth story or a dangerous trap. Ultimately, RZLV presents a fascinating contrast between narrative and numbers. The company has successfully established an attractive narrative backed by significant partnerships and an aggressive growth plan in a hot sector. This narrative drives the stock's potential expectation to nearly double its current price, as reflected in some analyst targets. However, the underlying numbers, the high net loss, negative equity, and the shadow of legal scrutiny represent a significant counter-reality. The key takeaway is simple. The stock will either fully realize the ambitious growth targets and defy the short seller narrative, justifying a much higher valuation, or the financial realities and legal issues will compound, causing a significant correction. All the noise, the acquisitions, the ARR guidance, it all boils down to one simple question of execution and verifiable growth over the next 2 quarters. Without that concrete evidence, the expectations built into the stock price are standing on very shaky ground.